In this video, we're going to be talking about why Capital One won't increase your credit limit, even if you have, a 700 plus score, even if your score has increased since you applied for whatever card you have, and even if your income increased as well. You may even be in the same boat as me where you think Capital One is super stingy, just like many other people. And for this very reason, I would tell people not to go for their cards, but I've actually learned something new, and I want to show you why they're not increasing your credit limits and then how you can actually get them increased. So if you're new to the channel, welcome. Here we talk about everything credit, banking, and travel hacking. Honestly, just how we can leverage our credit to live the best life possible. So if that interests you, go ahead and leave a like and subscribe to the YouTube channel to see more content like this. But without further ado, let's get into the video. So first, I want to explain the Capital One paradox that a lot of people go through. So the good things about Capital One, they have a lot of strengths, right? They will approve beginners in their credit journey when other cards won't. For example, Chase, Amex, right? You guys can get approved for Capital One when other banks won't. They also give you guys accessible, secured, and starter cards that allow you to build the foundation for your credit journey. But on the other hand, the reality later down the line when you get these cards at the beginning is that the limits barely increase over time, and usually you, the card holder, will outgrow that product in a couple of years. And this just creates a perception of stinginess with Capital One once they won't increase your credit limits or give you a better card. So that is the paradox that a lot of people are facing. And I understand if you're facing this and you want to get out of this situation, I'm going to help you to do so. The reason for this is because Capital One works on a bucket system. The way this works, let me go through these step by step, right? So first, they will receive your application. You apply for a Capital One credit card at a specific point in your credit journey, then assess the risk that you have on your credit profile. So Capital One will evaluate your credit score and your profile strength at the exact moment that you applied for that card. This is very important to keep in mind because once you apply for that card is completely and permanently placed into a risk bucket based on your profile, based on your credit score. So once we're in that bucket system, that bucket assignment, Capital One now puts a growth cap, a growth ceiling on that specific credit card. So that card is essentially bucketed, is the term that a lot of people like to use, because they can never get past a certain limit, and that will happen forever, right? A little important note is that buckets do not update as your credit improves. So that specific card in the Capital One ecosystem will remember what type of profile you had, who you were at the time that you applied, not who you've become later down the line. So now that we know that they work on a bucket system, I want to actually show you guys the different categories that Capital One has when they are bucketing you. All right, so I'm on the Capital One website and I'm just using the compare credit cards tool to be able to look at these three different cards. As you guys can see, if you were to apply for either one of these cards, you're basically going to be getting the same card looks-wise. Looks-wise, these cards look completely the same, except for the one all the way on the left here has a little one right here. But other than that, they look exactly the same. So I understand how you can get confused, but let me explain the differences to you guys now. So as we can see, let me actually scroll down right here. These are the different buckets that each one of these cards have. So the Savor One Rewards, there's one for fair credit, then there's a Savor Rewards for good credit here in the middle, and then on the right, there's a Savor Rewards for excellent credit. And these are the differences that they have. The excellent credit one is going to have no annual fee. You'll be able to get a bonus. You'll get that 3% back, right? But the other two cards, it gets progressively worse as you go down. So here in the middle card, you'll still have no annual fee, but now you're not getting that bonus. And then if you go down to the fair credit card right here, the first one, you're going to be getting a $39 annual fee, and then you won't get the bonus or anything like that. The way and the reason that Capital One does this is because you are more of a high risk when you have fair credit and they approve you for this card, right? So they are basically mitigating the risk by charging you an annual fee when you have fair credit. But when you have excellent credit in the algorithm, they're going to see that you have lower chances of, getting in debt or not making payments. So they'll be able to approve you for the higher limit and the no annual fee. So when it comes to these cards, you guys now know that there's three different types, and you have to make sure if you're in an excellent credit range that you apply for the excellent card. Let me actually go over some other ones that Capital One has so you don't make that mistake. Now that you've seen these, let me actually go over some other ones, the venture cards, so you guys know how to also distinguish these cards as well. As you guys can see on screen, we have three different Venture One cards, and each of these are going to be different based on the bucket system, right? The first one right here is for good credit. Then the middle one is going to be for excellent credit. And then the one on the right is also going to be for excellent credit. So that is what we want to look at before we apply, right? The difference is the first one has no annual fee, but you won't get that bonus like you will on the middle one. And then on the right, you will have a higher annual fee just because it's like a middle tier card in terms of, bonuses. You will get a higher bonus, 2x miles on every purchase, but you would just have a higher annual fee. So if it were me, I would either apply for the one in the middle or the one on the right, depending on if I want an annual fee, if I want bonuses. But either of those are fine because they're in the excellent credit range. So now that you've seen many cards with Capital One, you will know how to distinguish them and know which bucket system each of them are in when you're applying for the cards. Let's get back into the presentation where I'm going to explain to you guys an example, right? Depending on the card that you apply for. So applicant A applied for a card at a 500 credit score, and he was placed in a high risk bucket. Over 3 years, his limit started at 300 and only went up to 500. This is a lot of you that are in this situation where you're asking for credit limit increases, but you're only getting a couple $100 added every single time. So you're technically bucketed on that card. But there's other people like applicant B who applied at a 740 credit score. They were placed in a low risk bucket, and then their limit started at 5,000. And over the next 3 years, they've been able to increase it all the way up to 15,000. So people like this do exist at Capital One because I've seen them, I've talked to them, right? We just have to be able to know when to apply. So let me give you guys the reality and the lesson. Applicant A, right? Let's say if you're applicant A, if applicant A were to improve to a 740 credit score like applicant B, they open cards at other banks with high limit. Their Capital One card will still stay at $1,000, right? If you increase your credit over time, it doesn't matter if you're asking for credit limit increases because that card will be bucketed still. So the lesson here is that even though we have the same credit card product, right? If we got the same card, there's going to be radically different potential when it comes to growing that credit limit just based on the time that you applied for that card and what type of borrower you were at that time. Now, a lot of you may be saying, why is it like this with Capital One? And let me explain why they built this system. So Capital One basically uses an early strategy method when it comes to approving cards. Their competitive advantage really comes from approving customers that other banks will reject so they get their business. So they will say yes to a lot of people when you're new or when you're rebuilding credit so they can buy into you early and have a longer lifetime value in you as a customer, right? And they also have a risk containment model. So they manage the risk by limiting growth on cards issued to higher risk profile candidates, right? The bucket system will prevent the overexposure of that credit. So those are kind of their strategies when it comes to approving cards. Let's talk about now their portfolio efficiency, which is honestly very poor. They don't usually reevaluate cardholders individually because that would be operationally expensive to Capital One. So this is why they bucket and automate the risk management at scale, right? Four different buckets, right? If you're placed in a bucket at the beginning, they will never reevaluate you to put you into another one. So that is the really crappy thing about Capital One and why I don't really like it. Unlike other banks like Amex, like Chase, like pretty much any other bank, they will reevaluate you once your credit score has improved. For example, Amex will soft pull your credit pretty much every single month to make sure you're not slipping behind or to see if you're increasing your credit. If you applied for a card with Amex at a 600 score and they approved you for a little limit, in a year's time, if now your score is 750, that limit will also grow to be a high limit because they like how your credit is improving. With Capital One, like I said, they don't reevaluate this individually. Like they don't do it. So you will be stuck in that bucket forever with that specific card. So keep that in mind, that specific card. So let's talk about how you can actually get into a new bucket to be able to get higher limits with Capital One. This is the real and honestly the only strategy that I've seen to increase those credit limits. And we have to accept the reality, right? Your starter card has served its purpose. It got you into the door, but it has a ceiling that will never change no matter what. So this is what we need to do. These 3 steps is what we need to do. We're going to want to disregard things that won't help us increase our credit limit. Then number 2, we're going to want to build our external credit with other banks to improve our score. I'm going to tell you guys exactly how to do that. And then number 3, we're going to want to know the right time and which card to apply for with Capital One. And I'm going to break this down for you guys step by step, starting with number 1. Step 1, what does not work, we need to ignore it. So monthly increase requests with Capital One doesn't work. Requesting an increase every month will just create application fatigue without actually changing the underlying ceiling that your card has. Additionally, waiting longer doesn't even do anything else at all for your card and for your credit limit. Time alone will not upgrade your bucket. So it doesn't matter if you have that card, that same card issued for over 5 years in low buckets, those cards will stay in low buckets. Additionally, perfect payment history will also not help you at all. Paying on time for years won't change your bucket assignment. It just will not get you out of that bucket. It maintains your account, but it doesn't trigger a re-evaluation, which is what we really need. And then finally, a product change will also not work for us, so we want to disregard it, right? Converting, let's say you started with a platinum all the way up to a Quicksilver card, will still keep that card in the same bucket. No matter what card you product change into, right? This is a gem. No matter what card you product change into, you will still be bucketed. So if you have a Quicksilver card that was fair credit and you change it into one that is a Quicksilver with excellent credit or a Venture One, you will still be bucketed with that card. You will still be bucketed with that card. A lot of people think you can just product change, right? You start with a baby card and change to another one. Capital One does not work that way. You will still be bucketed even if you product change. So the bottom line is a capped card stays capped. No amount of good behavior with Capital One can change the bucket that you're in. So those 4 things are what we need to, accept the reality of and disregard because they do not work. We want to still, keep on-time payments, wait some time, but we want to wait time differently by doing things at other banks. So that's why I want to get into step number 2 of what we actually need to do to increase that credit limit with Capital One. Step number 2 is building our external credit and improving our credit score. These 4 things right here are going to help you to do so. So first, we want to choose the right banks. We're going to want to focus on banks that don't use bucket systems and reward our growth over time. Banks like Discover, banks like Amex, banks like Navy Federal are excellent for building and rebuilding credit because they have generous credit limits and credit limit increases, which is one of the most important things. We want to go into those banks because they are very good with giving high limits. Next, we want to diversify our portfolio. We don't want to just rely on one bank, right? Don't just go for just one Amex card and that's it. Don't just go for one Discover. We want to go for having 3 to 4 cards from different issuers showing that you can manage multiple credit relationships responsibly, right? Let's say the first card you got was that Capital One Platinum. Next, you can go for a Discover card that increases your limit over time. Then you can go for Amex. Then you can go for Navy. Now you have 4 cards on your credit. So then when you go to apply with another card with Capital One that I'm going to explain to you guys in step 3, now we're looking good, right? But before we can do that, we want to demonstrate the responsible usage of those cards, of those new cards that we get. Keep that utilization low, make on-time payments, and use the cards consistently and pay them down, right? This is going to build trust across your entire credit profile, which is what the banks want to see and what Capital One wants to see once you come back to them. So the final piece of advice that I can give you is with those other cards, Discover, Amex, Chase, Navy Federal, we're going to want to request, credit limit increases every 3 to 6 to 12 months of good history of using that card, right? A little hack, a little gem that I can give you guys with mainly Amex, but all the other cards as well, is every 3 months with Amex, you can kind of ask for a 3x credit limit increase if you've been using that card a lot and paying it back every single month. So let's say with Amex, you started with 2K. After 3 months of using it consistently, you can get that up to 6K, and then that 6K into 18K. Once you get into the higher limits, I wouldn't go like exactly 3x. Maybe that 6K turns into 15K and then 15 into 20, right? Once you get to a higher limit, it is a little bit more risky to be asking for higher limits because Amex can trigger a financial review. But that is a little gem with Amex. Same thing with Navy Federal. You can ask for credit limit increases every 6 months. So keep those things in mind. Once we increase those limits, we're going to want to signal to Capital One that we are credit worthy, right? So once we have higher limits, Capital One will see that and they will want to approve us for the next card that I'm about to talk about in step 3 and when we should apply for that card. So step 3 is getting that new Capital One card. So this is actually the only way, really the only way to get out of the low bucket system. You have to reapply for a card in the excellent category like I was explaining before. It has to be in that category. So you can be in a low risk category and you won't be bucketed. That is the only way. Can't product change. You can't do anything. You have to make sure that you're applying for a new card in the excellent bucket to be able to get those high credit limits. But before you even apply for that card that you're going to apply for, you want to know when to apply. So let me tell you the wrong time and then the right time to apply. So the wrong time is if you haven't been following my advice, you have a 620 score still, you only have $1,500 in total credit limits, you only have a year of history. You may get approved for the excellent card, but it will probably be a low limit that you're going to have to build over time and you're not in the right position. The right time to apply for that new Capital One card is going to be at a 720 plus credit score, 15K plus in total credit limits across all of the cards that I told you guys that you should get, and then have, 2+ years of clean, good credit history. Now, after you do that, you will be in a way better position and you will actually qualify for that higher bucket card to be able to get higher limits with Capital One. So the core takeaway after all that information, after all those gems that I gave you guys on how to actually increase your limits with Capital One, is that Capital One, truly, they aren't stingy. I used to think they were, but now that I've learned these things, I know that they are not. They are just extremely risk adverse and they low-key have some outdated systems. That's it. For example, like I've been saying with Amex, they will consistently softball you basically every single month to make sure your credit is staying where it needs to be or increasing or decreasing, right? With Capital One, they usually will never check again after your initial approval. The bottom line is that your starter card, it got you in the door, but it's going to stay in that risk category forever. I still do recommend Capital One, but just not early in your credit journey. There are a lot of other banks and a lot of other things that I've explained on my channel, like getting a Chase card, like getting a Discover card, like getting a Navy Federal card, that is better than getting a Capital One card at the beginning. I don't recommend getting a Capital One card as your first or second or third card at all. Capital One has to be later in your journey when you can go for those venture cards, those Venture X cards that are just in the excellent category range. So you're not bucketed in that low category system forever. You want to be able to get into a high category with Capital One later in your credit journey to then really take advantage of the great bonus miles that they have and the great credit limits and the great bank that they are. So that is what I recommend for you guys. That is the bottom line, the key takeaway for Capital One. They're not stingy. You just got to know how to play the game with them a little bit better. They're more of a chess bank instead of a checkers bank, if you know what I'm trying to say. So if you enjoyed the video, go ahead and leave a like. Go ahead and subscribe to the channel if you want to see more up and coming content like this. And if you want to check out a video on the 5 credit card mistakes that a lot of people make that actually gets them instantly denied for credit cards, go ahead and check out this video right here, and I'm going to catch y'all in this video. Peace.